All right, cool. So thank you guys for joining. This session is going to be about entries and Forex, and it's really going to be, I'd like to keep it mainly to like questions that you guys have specifically related to entries. That way I kind of know where to take the session and, the things that I should talk about. So for anybody that has any questions regarding entries, just ask me that in the chat box and then we'll go over it in just a second. I'm just going to go over a few points that I want to talk about before that. But if you have any questions on entries specifically, then post it in the chat box and then I'll answer it. So anytime that you're looking for an entry in Forex, you always should start with a higher time frame. And that really depends on the type of trader that you are, right? Are you a day trader? Or are you a swing trader? What type of trading are you doing specifically? So in terms of my trading style, I prefer to only be in the market for, shorter periods of time, maybe a day, maybe 2 days max, but I don't mind swing trading. It's just not my personal preference, but obviously if I see a swing trade setup, then I'll take it. And how you would identify a setup like that is by working off of the higher time frame. You're going to want to stick to, a monthly or a weekly time frame if you're looking for a swing trade. But if you're looking for day trades, then obviously you'd want to stick to, the course of the day and intraday time frames. So I'm mainly going to be talking about, my strategy and the things that I do because it's just what I found that works for me best. So I typically just only work off of the daily. I do analyze the monthly and weekly, but it's just at the beginning of like a new month or a new week. I don't monitor that as much as like the daily or something like that. And that's also because, we don't have, a new candle until the end of the week or to the end of the month. So in terms of my trading style, though, I like working off the daily. So I'll look at the daily chart and I'll figure out, what is the market telling me in terms of direction? Where do I think it wants to go? Does it want to go lower or does it want to go higher? And it's really as simple as that. You just have to simply, either write it down and answer it in your head or however you want to do it. But work off the daily and ask yourself, is it going higher or is it going lower? And if you think it's going to go higher, then you should only be looking for buy setups. And we'll get into the setups and stuff in a bit, but you should only be focusing on buys if you're bullish. If you're bearish, you should only be focusing on sells. There should be no confusion there, and there should be no counter trend trading. If you're bullish, for example, if you're bullish this pair, you should only be buying this pair. You should never be selling it until you become bearish. So you have to have an overall bias of what is the market direction? Is it going up or is it going down? And after you answer that, then you're going to work down, onto lower time frames and break down your charts. So after you've determined direction on a daily, so let's determine direction on a daily. For this analysis, we're going to look at dollar CAD. So in terms of the daily, what do we see, right? Well, we have a low right here. And then right here we have a high that's formed. And the reason I'm picking this swing is because this is where price currently is, right? Price is within this low and this high. It's not, it is also within this bigger move, but if we're working, on a daily time frame, then stick with, the trading area that you're within, So we're within this swing, so I'm going to be operating for my buy or sell setups within this high and within this low. Now, if we break above this, that's going to indicate higher prices. If we break below this, that would indicate lower prices, right? Why would that be? Because that would be a lower low or that would be a higher high from the daily range that we're trading within. So yes, this is a daily chart, daily time frame. So currently we've had a breakout above these highs here, right? And then we've also formed this area right here, this little consolidation, formed a higher low, right? So we have swing low. And then right here we have a higher low, right? So the next thing that we would be expecting based off of this daily time frame would be what? A higher high, right? For bullish price action, it would be a higher high. And that's simply because if you study patterns or anything like that, this is just a basic continuation pattern. All right? A, B, C, D pattern, or whatever you want to call it. But that's all this, that's one idea, right? You can obviously break this down in more detail as you get further, into your analysis and your development as a trader. But overall, we would be bullish based off of what we've seen, right? So then we would drop to a 4-hour time frame, and we would be looking for our setup. And what I mean by our setup is what are the things that we are looking for to occur in the market for us to enter. So that could be, a number of different things depending on what your strategy is. For me, I like to see some sort of trend confirmation on the 4-hour. So, if I'm looking for buys, obviously I want to see higher highs and higher lows. I am going to make this smaller. So we know this is the low. All right. And I want to see higher highs and higher lows forming. So right here we have a low and we have a high. Then right here we pushed up and made a higher high. Here we've made a higher low, pushed up, made a higher high. Broke out above this consolidation that was here. All right, traded down, formed a higher low. All right, made a higher high. Traded down, made a higher low, higher high. All right, so as long as I'm seeing this, a break above that confirms, okay, the buyers are here, traded down, made another higher high. Now we know the buyers are in. And the reason that we know the buyers are in because we had a 4-hour break in market structure. Right, we had a little consolidation that was right here, and then you can see the market traded above that. Right, so in this candle, the market traded above this consolidation here. Once we traded above that, we should be looking for buying opportunities, and the reason because of that is we've had a breakout signaling that buyers are in the marketplace after forming a higher low based off a daily time frame. Okay? Sure. All right. So once we've had this break above, what would be the setup that I would be looking for in terms of an entry? Well, me in particular, I like to enter off of ICT bullish order blocks after I've had a break in market structure. So I'm trying to do this with keeping the edge of the chart cut off so it's not confusing you guys after seeing the price action we've had. All right, so in terms of an ICT bullish order block, let me just highlight the whole thing, it'll be easier. It's going to be this down candle before that up move. This down candle before this up move is considered an ICT bullish order block. And if you don't know what that is, it's basically just a down candle, and the up candle that closes above that down candle confirms it as an ICT bullish order block. It's just a concept taught by Inner Circle Trader, ICT, who is probably one of the best Forex traders I've ever seen. And you could just search him on YouTube or anything if you want to figure out more about his stuff, but he goes in detail of, how to find these and all that stuff. But that's what I look for. I wait for an ICT order block, whether I'm bullish or bearish. In this case, I'm bullish. So I'd wait for that to be traded back into. And I, for example, once price traded above it, I would then move to an hourly time frame after I've highlighted this ICT bullish order block. And the reason I'm doing that is to get a more refined, uh, dialed in look at price action. So after I have that marked out, I'm going to drop down to an hourly. All right. So we have, I'm going to delete this so you guys don't get confused, but this red box is that 4-hour ICT bullish order block. So once we traded above it on a 4-hour, I would have dropped down to an hourly just like this and waited for price to trade into it. Once price traded into it, I wouldn't necessarily be buying it here. You could buy it here with your stop loss below here. That's one entry opportunity. All right, so we'll mark that out. All right, and that I would just consider this a more aggressive entry. And the reason being is because I like to wait for a lower time frame confirmation after I've had that higher time frame confirmation as well, just to really get a more dialed in look at price action. So aggressive entry would be here. Stop loss would be below this low, and I think that's about, oh shit, hold on, 40 pips. So not too bad, but I like to wait for that confirmation on the lower time frame, because you could really get a more dialed in look at price action, right? So why is this? Okay. All right. So once we've traded into this and we've reacted off of it, showing bullish price action by breaking market structure, and we know it's a break in market structure because on a lower time frame, we were making highs, lows, lower highs, lower lows, lower highs, lower lows. Then we get a break in structure. We know that the buyers have stepped in after reacting off of a higher time frame support level. All right, so we get that break in structure. You can enter off of the retest of structure. So that's another entry opportunity. So where is the, all right, so let's mark this and we'll do second entry opportunity. And you guys just have to go through the charts and back test this stuff, study it, and figure out what you like, what works for you. What are you more comfortable buying it here? Are you more comfortable waiting for this and then buying it here? All right, so this could be the setup that you wait for. This could be the setup that you wait for. Well, you can also draw your fibs from the break in market structure, the swing that broke market structure, this low to this high. Now, I don't use the 50% retracement, but it did come back down and hit the 50% retracement and then react nicely off of that. So if that's something that you want to study and look at, is entering off the 50% retracement level after you've had a lower time frame break in structure, well, that's another entry opportunity. Entry number 3. So you guys can see, based off of analyzing off of a higher time frame, you don't need to know much other than what way is it going, up or down. Once you know the way that it's going to go, whether that be up or down, you just simply look for either buys or sells depending on what market you're in. And then the way that you enter is all based off of what you trust. What do you have confidence in? What is something that you've tested? How many have you seen it work over and over again? Like, until you see that, then you're not going to really have, a defined setup, and you're just going to be entering wherever you feel like it. And you're just going to kind of, you can't just look at trading as something that you can just, let go by on the sidelines and expect to automatically, know how to make money. If that's the case, you're going to more than likely lose money. You have to have a plan. You have to define your plan, Write down your plan every day if you have to, like whatever that may be. But my plan is, I mean, it could be as simple as start with a higher time frame on the daily, drop to a 4-hour time frame, find the setup you're looking for. Just like we did, we were looking for the 4-hour ICT bullish order block to be hit. And then once we hit that, then that confirms, okay, the buyers are in. So I would have probably went long based off of this with my stop loss below here. So in terms of risk, our initial position was 40 pips. This would be, if you use this full swing, you would be looking at 88 pip risk. So that did not reduce your risk much, but that's why you also have to learn how to manage your trade. Once you get a higher high form, then I would have trailed my stop loss and moved it below a low on a lower time frame. So you also need to know about other support and resistance levels within the market. These two up candles right here is a level that they were selling off of, right? This is an ICT bearish order block once it broke below. Now once it got back above it, look what happened. It acted as support, and they used that to buy off of. So I would have had my stop loss below here. But you guys that don't have much experience yet, you know, your stop loss would have been this whole swing. But even if you're using the whole swing, you've had confirmation that the buyers are in. If you use proper risk management, it doesn't matter because you're able to trail your stop, you know, real soon. And I mean, you could see that if you entered here, you would have had 28 pips drawdown and 200 pips potential profit. I mean, 237 if you're being specific, but yeah, 237 pips potential profit. And you could have gotten out at any point that you wanted to. If 50 pips was enough, fine, get out at 50. If 100 is enough, get out at 100. But you have to figure out what works for you, because not always will, you know, the specific things that work for me will maybe not work for you as well, because you have to get more experience and, you know, you find other things that just work better for you. And that's fine, because you can see the market different than I do, but you still have to have the basic concepts down. And that, you know, that's just simply understanding support and resistance, starting with a higher time frame, working from a higher time frame down to a 4-hour, 1 hour. Once you get to a 1 hour, placing your entries on a 30-minute or 15-minute for, you know, the least risk possible. But that's just kind of how you have to look at it. And for example, we've framed this whole trade off of the 4-hour time frame. So in terms of targets, a lot of people are trying to place entries on a 15-minute time frame and then set 4-hour targets. This trade was framed off of a 4-hour time frame. So where would my target be? Well, my first target would be this low right here. So let's move that away. It'd be this low, because I would expect price to trade back up in here, because this is an ICT bearish order block. Resistance level, okay? So price trades through that. Where would my next target be? Above this high. Why? Because it's previous resistance. Anybody that was short here, their stop losses are going to be above here, and the market will likely want to go above there to take the money out. Trades above there. Next target would be this high, right here. What happens? Market trades above it, consolidates a bit, drops lower, trades above it again. You know, so that's it. You know, it's just about determining your direction. Are you buying or are you selling? And then finding your setup, and then always base your exits off of the same, like, so you framed your setup off of a 4-hour. Frame your targets based off of a 4-hour. You're just going on the lower time frame to find your entries. Entry number 3. This doesn't look as clear on a 4-hour, does it? This does look clear on a 4-hour, but this doesn't look clear on a 4-hour, does it? You know, as you're working on these lower time frames, 60-minute, look how clear this is. Trades right into it, breaking structure, retest it here, consolidates around it, and then eventually we get a push up after this drop lower. So in any point of these, this is a good entry, this is a good entry, this here, this, it's just depending on what do you find works best for you. And then, you know, setting your targets is real simple. It's just we framed our trade off of a 4-hour, so I'm going to set our targets based off of a 4-hour. If you're framing your setup off of an hourly, then frame your targets off of an hourly. So, you know, just say we delete all this, then, you know, say this is your setup right here. We'll use a different one just so you guys don't get confused. All right, say, I'm just trying to find something clear. Okay. Say the market made this swing here, right? So it traded lower, it broke structure, so it made a lower low. You can look for that level to be traded back to enter off of, and that level here to exit. Okay, frame your entry off an hourly, frame your exit off an hourly. Okay, you see what I mean? Trade up into it. Why this level? ICT bearish order block. It's confirmed once this candle breaks it. Any retest to it should hold as resistance. It does that, trades lower, just swoops right below this and then pushes up again. Okay, it eventually comes back below and lower, but like, do you guys see what I'm saying? You have to frame your entries and exits off the same time frame that you're looking at. You can't look for, you know, your entry on a 15-minute and then try to go set your targets on a 4-hour. You have to already start from the 4-hour and have your targets set based off of that. Okay, so that's pretty much it for my end. I'm going to go ahead and look at these questions now. Am I recording? No, this is not being recorded. This was just strictly for the people that could be here live. What do you think about looking at a 15-minute or 30-minute to start making higher highs and higher lows on the aggressive entry? All right, let's go take a look at it. Oh shit, we deleted it. All right, no worries. So let's just go back and we'll map it out. All right, and so we've got it mapped out there. Now, all right, go to a 30-minute. And to answer your question, Fernando, yeah, man, anytime, I'm showing you an example of it now. I just need to find where that block is. But anytime that you drop to a lower time frame, I always just use it for confirmation. So I use the 30-minute, the 15-minute. I do drop down to the lower time frames for further confirmation. But I like to stick to the hourly as well because it's really clean. All right, that's why we weren't seeing it. All right, bam, here we go. Okay, so we've got that 4-hour order block marked out. Now we can drop into a 30-minute and we can get even more refined price action, right? This doesn't look that clear to me, so let's drop into a 15-minute and see if we can get something clear. All right, yep. So as price trades into it here, it forms a low, trades back up, forms a high, higher low, higher high, higher low, higher high, right? Does all of this before breaking this level here. This was our hourly retest entry, okay? This is the level that we were going to get in on the retest. So look at how you could have done this. Once these down candles, also within the 4-hour setup, bam, once it broke above that, confirms it as an ICT bullish order block, you could have entered here. So you could have already been in the trade with your risk below this low now, even more dialed in risk for only 18 pips, and you would have already locked in 56 pips, and then you could have compounded a second position on the retest. So this is like, it all works, guys. It's just a matter of actually going through your charts and finding the things you look for. So this could be the thing you look for. Mark out a 4-hour ICT bullish order block, wait on a 15-minute for it to trade into it. Once it trades into it on an hourly, drop into a 15-minute, wait for a bullish order block to form near that 4-hour level. Once it confirms it as a bullish order block or bearish order block, wait for the retest, enter, place your stop loss below the previous low, and then look for your targets. So yeah, I would totally drop into a lower time frame, Fernando, whenever you're looking for your entries, bro. It just refines it more. So that 80 pips up here, that's if you're trading off of an hourly time frame. I know that sounds ridiculous, like trade with an 80 pip stop loss, but that is a confirmed trade. You had the buyer step in, you based it off of a higher time frame. Yeah, your stop loss may be big, but you know, that may be a setup that you look for. That may be your thing. I don't mind this, but this works too. You know, entering as it trades into it, this works too. It's really whatever works for you guys. Like, this isn't my absolute favorite thing in the world, just based off of this price action here, but I do tend to like to place my entries after we've had a break in market structure. I enter on the retest of that structure. So I talk about my fibs and stuff like that, and you know, you could pull your fibs on the 15-minute of this break in structure, and then you get, you know, that same retracement into the 50%, and you know, have no drawdown. And if that's a setup that you've studied and put time in and learned, they all can make you profitable. It's just a matter of figuring out what works from you. And so many people just spend time jumping back and forth from different things, and they don't just stick to one thing and then try to master that. It ends up messing them up. Okay, so let me see. Let me check out the questions. Yeah, if you have the ability to record it, go for it. But I don't think I could record it anymore. I've already done the presentation, and I have to set recording to start before the presentation begins, I believe. Yeah. So, no, I mean, if there's something specific that you're confused about, just ask me in the chat box. But has this been helpful to you guys? Just type yes in the chat box if you've, you know, found some value in this, or, you know, this has helped you somewhat. I want you guys to be able to leave with something. Okay, cool. Sweet. Thanks, guys. Yeah, so I mean, that's pretty much it. Is there anything else that I could go over for you, Miss Z, to help you get a little bit clearer understanding? No problem, Ryan. Appreciate you for joining, brother. Yeah, so I'll stick around for a couple more minutes to answer some questions if you guys have any. What's the best time for you to trade? I only trade during London and New York session. So that's 1 to 5 a.m. Eastern Standard Time, and then about 7 a.m. to 10 a.m. Eastern Standard Time. Those are the only two times I'm really looking at the market. What do you mean need permission for recording, Golda? You can, yeah, you can definitely record it if you have a way of recording it. I don't mind. I don't think I can record it from my end. I don't know what to do. Do you use COT data at all, like ICT, or just straight price action? Honestly, man, I have not gone through the COT material again for me to understand it. So honestly, I don't use it right now. It would just be another tool to add to like my uh, things that I'm looking for in the marketplace. But I don't currently use it. I I don't think that you necessarily need it to become like a profitable trader or anything. You can deal without it. It just helps you. It will refine your price action and it'll just map out bigger moves, more confidence in setups, all that stuff. So as I have more time, I'm going to be working that into my schedule to go back and study more of like COT data and stuff and go back through some of ICT's material again, because it's been a while since I've gone through it and I've just been really implementing the things I've learned so far. So let's see. What's up, Anthony? Thanks for joining, man. Hey, what's up, Obayed? I'm sorry if I mispronounce your name, but yeah, thanks so much for coming out, man. Q Banks is he's a beast, man. I've been following him for a little while. He's a really good trader. Um, any advice? My goal is to make $200 a day. So if you have a goal of a certain amount of money that you want to make per day, then you need to set up a plan on how you're going to achieve the goal of getting there, right? So $200 a day, that is 20 pips on one standard, that's 200 pips on a mini. So break that up. Are you going to look for 20 trades at 10 pips? Are you going to look for two 100 pip trades? And I would just figure that stuff out, man. And as you map out, how you want your days to be. So do you want that to be 10 pips a day for 20 days? Keep in mind that you're going to have losses though. So you also have to prepare for losses. Make sure you're using proper risk management, all that stuff. But $200 a day is definitely possible. Don't think that it isn't. You just have to work towards that. And also don't think that you're going to have a $20 account and try to make $200 a day, bro. I mean, there's a lot of people out there that actually believe that they want to deposit $20 and they want to make $100 a day next week. And that's completely impossible unless you know what you're doing. It's possible for someone who's had experience and stuff in trading, but until you get to that point, it's going to be really tough for you to try to do that. So, but yeah, man, $200 a day, totally possible. Just got to work towards it, set out a plan. How many trades are you looking for? What's the pip goal that you're looking for? And just execute on it, man. Day in, day out, you'll get it. What pair do you suggest are good beginner pairs to focus on? So there is no good or bad pair to focus on. I only focus on the majors. So that is, anything with USD in it. So USD CAD, USD JPY, Euro USD, GBP USD, all that stuff. That's the only pairs I focus on. And that's primarily because I'm in the US. But you can trade anything that you want. I find that, how I trade and the things that I look for unfold better in the majors. But please, if you're looking for a pair, don't look for multiple pairs. Just find one pair. So if you want to trade a slow pair that you could learn on, look for, AUD USD. It's a lot of consolidation, but you can trade during, Asia. You could look for 10, 20 pip setups, and, like the guy that was looking for 200 pips a day, you could find 10 pips a day every day in AUD USD with very low risk and learn. You learn with AUD USD on a demo account, and then after you've learned, then, you could try on a live account if you want. But yeah, you just figure out what you want to do. There is no good or bad pair. It all comes down to the trader. The trader is the person who will make the difference. You just have to learn the skill set of trading and figure out what you want to look for, and not what you want to look for, but what you need to be looking for. And as you find those things, and you know what works for you best in your strategy and all that, then you put them all together, and that's it. You just execute that on whatever pair you want. I typically only trade GBP USD and USD JPY. Those are the only two pairs that I typically trade. Mainly GBP USD. What pair? Okay, wait. It says when should ask permission from the host when you want to record. Yeah, I'm not sure what's going on with the record, guys. I didn't record this session. This was just for the people that attended live, but I don't have a way of recording it now that I'm already in the session. So unless it records automatically or something, I'll let you guys know after the session. But as far as I know, this one is not recorded. And if it says ask permission, I have no idea what I'm supposed to do because I don't see anywhere that it's giving me access to approve you guys. If you're looking to buy the USD CAD, do you look at all the USD pairs and the CAD pairs to see who's a driver? Yeah, you totally can. Is it something that I do particularly? Not really too much. Honestly, I just look at the dollar index, and since I look at, since I'm primarily trading cable, I really just look at Euro GBP. So I don't look at like GBP CAD or GBP JPY or anything like that. Now, since I do trade GBP USD and USD JPY, GBP JPY, the beast as it's known, I do look at sometimes just for direction, but I never trade those pairs. So it's a good practice to use it as a tool in your strategy to check out other pairs to see which one is leading. But again, it all comes down to the technicals and how you see price action. Okay, take it easy, Michael. Yeah, no worries, Anthony. That's, I don't know if I maybe typed the time wrong somewhere, but yeah, bro. If this recorded, then I'll make sure to post the recording in the Telegram as well as the Facebook group. Found you. Sorry, guys. I'm trying to catch up to the comments. How do I catch reversals? You catch reversals, Miss Z, by looking for a break in market structure. Once you have a break in market structure, then that usually indicates a reversal is unfolding. And if you don't know what a break in market structure is, I actually have a full video that I did on my YouTube. So you could do youtube.com/Jeffrey Rodriguez and just go look on there. You'll see defining a break in market structure, and I actually broke down what I look for to define a break in market structure. No, I do not use indicators like RSI or anything like that. Then you should from daily and work your way up quickly so you can explain it. Hey, bro, you said earlier that if you're a day trader, then you should strategy from daily and work your way up quickly. Can you explain? Yeah, I trade primarily, like I do day trades, right? So I use the daily, the 4-hour, the H1, 30-minute, and 15-minute. That's really the only things that I use. I'm not really sure I understand the question that you're asking, but what I was saying is you always want to start with a daily and then you work down from there. You never want to start with a 15-minute and then work up to a daily. So you're not going to want to start with a 15-minute to look for buys or sells to determine trend and then set your targets on a daily. You want to determine your setup, your bias, all that stuff from a higher time frame, and then lower time frame for your entries. Yeah, just stick to one pair. If UJ is that one pair, then do it. You know, UJ has specific things that you'll learn about it over time. You'll find UJ will make the lower high of the day during Asia session. So, you know, look for UJ to trade into support or resistance during Asia session. Once that happens, then super simple. You just buy or sell after you've had, your criteria met for your trading plan, and then bam, you can potentially catch the low or high of the day for USD JPY just by knowing that and just by actually executing based off of that. Yeah, no problem, no problem. Appreciate all you guys for being here. So there's just a few more questions that I'm going through, and then we'll wrap it up. Um, Sorry you cut off. What are the pairs? I trade GBP USD and USD JPY. Yeah, it does say it's recording in the top left, Arnold, but I am not sure if that means like recording my screen session like for Zoom, or does that mean that it's actually like recording to save it? Because anytime that I do like a recording to save and upload to YouTube, it like saves it to my computer. So if you enter on a fifth, so all right, if you're basing your trade off of the question is, okay, so enter at 15-minute, but what time frame would you set your take profit at? And that's what I was just explaining. So you want to determine your bias. So I'm looking for buys on USD CAD, not right now, but during this time frame, April 18th through the 20th or whatever, I was looking for buys in USD CAD, right? So if that's the case, then I'm going to refine it from a daily to a 15-minute to get my entry. But my take profit and targets are going to be set based off of the 4-hour, because that's where my trade setup was. Does that make sense? Because that's where we outlined the 4-hour ICT bullish order block here. We outlined the 4-hour ICT bullish order block here. So our targets would be this high, then we would have this high. So you'd be targeting each high based off of the 4-hour though. The 15-minute is just used for your entry to get the least amount of risk possible. ICT is a trader. His name is, it's Inner Circle Trader. So his real name is Michael Huddleston, but you can find him on YouTube or anything like that. That's the guy that I learned all my trading stuff from. Yeah, Anthony, if you can, man, if you stick to one pair, bro, it'll be a huge help. That was actually my problem, man. I was literally trying to watch every single pair and determine what every single pair was trying to do, causing me to not have clear focus on one pair. So I was really losing so much more money than I was making because I was looking at too many pairs. If you look at one pair and start to understand what that pair does, when it does it, what time, what session, what is it that it's doing? Is it taking out sell stops into an order block, or like what are the things that it's doing? So you'll start to understand that, in specific pairs, and with that, that should be the trade and what you guys execute off of. So for all you guys that are still here, I do appreciate each one of you for sticking out. These live sessions are something that I'm going to try to do as often as possible when I have free time. For the free groups, I know a lot of you guys, can't, maybe you don't have the funds or don't want to, subscribe to a course or a paid group or anything like that. But I do have a $25 group, smaller group that I'm building for more personal, like help with trading and entries and really anything in a person's trading. And I got a couple spots left in that. I got about 14 or so filled. And I'm letting about 5 to 10 people in that as well. So that's just something where we go over like all the setups that I'm looking for. Like I have my weekly outlooks, of course, but I do I do like a weekly live session, which I just started that, and then that's going to be with Q&A at the end for them. Specifically just to help them with their trading. And then I'm going to give them 3 or more trading signals a week. So a little bit more signals than what's in the free group. So yeah, if you guys want the link, just give me 1 second and I'll drop that in the chat box. So if you want that, the link for that is in the chat box. Whoa, that was weird. It'll be in there in just a second. Sorry, it's like not working. It was trying to take me to YouTube. All right, here we go. All right. The link is now in the chat box. So if any of you are interested in that, it's $25 a month. You can cancel anytime. But yeah, I'm just going to do like 3 or more live sessions in there a month, 3 or more trade signals, and then you have direct access to me. So it'll be good for any questions that you guys have or anything like that. But if you want it, the opportunity is there. Otherwise, I will still be doing live sessions and trying to be as active as I can in the free groups because I know not everybody can afford, you know, spending extra money on something, especially when they have bills and stuff. So I know it could be rough, and I understand. So I'm here to give back to the free community as well. I'm not going to hold out on you guys. So if there is any other questions, guys, make sure you answer them real quick because I am about to hop off here. What Inner Circle Trader? Search Inner Circle Trader on YouTube. That's ICT. All right, guys. So, yep, it's been a pleasure. I appreciate all of you for sticking out, and I'll see you guys on the next one. All right, take it easy. Have a good one, Sherry, Anthony. All right, guys, take it easy. Golda, bye. Okay, cool. Yeah. If you need the link, it should be right above in the chat box. I know a few more things came through since, but if you need me to send it to you, just reach out on Facebook at JRod Forex or Jeffrey Rodriguez, or on Instagram. I'm on all that stuff, so you could find me. Or just click the link above. I'll post it one more time before I close this down. But that's it, guys. I am out of here. Hey guys, if you just joined in, the live session just ended. So I'll be in the Facebook group or on Instagram if you want to hit me up on there. But the live session did just end. We started at 3. So I'm gonna go ahead and close it down now. See you guys later.